Okay, welcome snipers. This is our afternoon bonus session. It's we have live FOMC in 20 minutes, 2 p.m. Eastern. If you're new to this and you don't know what FOMC is, it's right over here. Forex Factory has this red folder, 2 p.m. Eastern, USD red folder, FOMC meeting minutes. It's discussion about, if you want to read the folder, you can click on the folder here. It's a detailed record of the FOMC's most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So they're going to talk about interest rates, inflation. This directly is affects the US dollar, which can affect the stock market, commodities such as gold. It happens 8 times per year, 3 weeks after the federal funds rate is announced. So we're going to get into this. So it's a red folder, meaning lots of high impact news, volatility, guys. Please, if you guys are trading, if you've never traded FOMC, use demo or mini micro lots, nano lot sizes, micro pips. Do not be over leveraging in an FOMC event, okay? Because it's kind of like NFP. It's known to blown up accounts, could be some fake outs and things like that. So let's get into this. I was on a one-on-one call. I just finished a one-on-one. What we noticed was bullish divergence on the 5 and 15-minute candles. We saw it coming down like this. We saw a little bit of the RSI strength increasing. So what we were doing was we kind of consolidated this area inside here. And then there's the break. There's the break with the volume above. You could buy the retest candle, stop loss below there, and now it's running right through there. So bullish divergence. You can see it also on the 5 minutes, how it was coming down, consolidating, but the strength is slowly increasing. And then we broke above this 50 area. So that was very important. That break, there's the momentum, there's the strength, and there's the push of the pips. From right here to there, almost 100 pips, guys, 90 pip move. So very, very nice move, guys. Be patient and wait, guys, for those moves, okay? Those setups happen, but just keep an eye on them. So let's go to the daily. Let's do a top down on NASDAQ. I'm going to do this a little faster so we can get NASDAQ, US30, and maybe gold done before 2 p.m., okay? So up here, we've got resistance. Over here, this is what we broke during London session, guys. So if you guys were trading with us on London, we saw the indices go bearish. It kind of started the trend in London market open. Here's an ignited daily candle, broke all of these wicks below us. So it's continuing to push low. Where's it coming down to? Look at where it came down to. So these bodies right over here, it just hit down here and now it's coming up. This is the bullish divergence on the 5 minutes that's causing the market to bounce off of this daily area and coming back up. FOMC, if it comes down bearish and we break this low and it continues to drive down, maybe we're going to come down to this area. 14,175. Maybe it's going to start to reverse the market now. Okay, so we've got an M pattern, up, top, double top, pushing down. We broke the neckline. That's why we got the daily drop. Maybe this is going to continue to drop. Maybe it might retrace back a little bit. We'll see the rest of the week. But this is the daily candle. It's bearish, but we're starting to form a tail on the daily, which is the 5 minute move that you're seeing right now. This bullish hourly candle coming up right now. Okay, so this is the hourly look. Very bearish. Lower lows, lower highs, lower lows. Now we're starting to push up a little bit. So let's now maybe look at some hourly levels. Okay, we're breaking through that area. We could possibly come back up to this area. Okay, so 14,460. If we can break above there, maybe we're going to attempt to hit that wick up there. Okay, so that's all I basically need to see for now. I can draw a trend line showing where we possibly just broke trend on the hourly was right here. So this was my hourly downtrend coming down, came down, and now we're breaking. So this candle is going to close in 14 minutes, right ahead of the FOMC. And we'll see if we continue to move up bullish or maybe it retraces back down. Okay. If it does retrace back down, we're looking to break the daily low and then maybe come down to here, 14,300 on the hourly, right down here. Okay, and now we can go into the lower frames, the 5 minutes. Okay, so big drop, guys. London market, we were trading it over here. Okay, so London market open, guys. If you weren't on the call with us, I took a sell, an impulse sell on this candle when it broke down. I went up 10 pips. I never secured my profit. It came back and it hit my stop loss up here. We never bit on the buy up here. We waited. And then when it started to break here, we got this new 30-minute candle at 3:30 a.m. And this is when we hit the sell on the market. I took a sell on NASDAQ and I also took a sell on the DAX on the German. And I secured pips down here, like 40, 50 pip drop, but I should have left a runner, you know, the woulda, shoulda, couldas, and then the market ran 100, 150 pips, continuing now, coming into New York now. So trading with Dave, New York market open. Here's 9:30 a.m. Big liquidity, bullish candle come up, FU candle rejection, market goes down bearish, okay? So this candle was a fake out candle, 9:30 a.m. open, and then they dropped the market. Now we're coming through here. It kind of consolidated. This was a lower low, again, lower low, but now we have like bullish divergence forming, okay? So the strength was actually increasing. That's why this was a nice buy area right here and pushing up. So now let's look at the 5-minute areas, okay? So we just broke through this neck, like this wick. Now we're getting a retest right here. If we continue to push up, this is the next area we're trying to break. That wick didn't break right there, okay? So we're gonna establish now a supply zone right here on the 5 minutes leading into FOMC. We've got supply on the 5 minutes short term. And so we're gonna see how this will react in leading into FOMC. If we break, if it closes below this hourly support, maybe we'll look for a push down here. And maybe we can look to short the market down here, back down to the daily, back down to that trend line, okay? So this is just some initial trade ideas right up here. And then if you're taking an impulse move, remember very, very, very small lot sizes, okay? Because we could be tracing to that New York pop right up there, okay? That's the New York high when they opened Wall Street, right up there. That's when it came up to, right there. Okay, so, sorry, is there any questions in the chat? If you guys have questions, the chatting group is disabled. What are you guys talking about? You guys can unmute your mics, guys, if you got any questions. What chat room is disabled?
Not disabled on my end, Ronnie.
I'm not sure what you got, what he's talking about. The sniper group, Mohammed. I'm not sure what you're talking about.
Maybe the Telegram he's talking about.
Telegram's working fine, guys.
Yeah, the Telegram, it's not it's a disabled group. It's not, I cannot chat in Telegram.
Okay, just send admin a question and we'll take care of it. Right now, we got to get ready for the FOMC right now. Just send us a message and we'll look into that. I can't do that right now. Okay, so guys, we got volume closing above. This could be a retest, but we've had 1, 2, 3, 4, 5, 6, 7 green candles coming in a row. Maybe expect a little bit of a retracement, but I'm not taking a trade until we get into FOMC. We're about 10 minutes away. So I don't want to buy the high before FOMC. So I'm not taking any trades right now. Okay. And now what I want to do is US30. I want to get this charted. We'll look at the Discord right after this, okay? I apologize. I just can't do the Discord channel right now. Okay, so this is US30 now, okay? So pretty much similar moves as NASDAQ, but let's do our top down. Let's go into the daily. and check this out. Okay, so daily areas. We got to look for the key areas, okay? So right here, we have daily resistance. Right here, we have daily support, a wick, bodies. This was today, we came down, we actually broke below it, but this is now just recently, we have that 5-minute uptrend coming up. That's what's creating this daily wick. And if we continue to push, okay, that's our high. Maybe we can break above the high, and our wicks are right here where we just broke below. And guys, if you have not traded FOMC before, if you don't know what it is, I would highly, highly recommend you use either a demo account for learning or micro, smallest lot possible to understand how it trades. I'll mute everybody again, okay? Sorry. Okay, so we've got our daily areas now. Now what we can do is go into the hourly. Okay, how is the hourly move looking? There was a big liquidity grab up here, and then they pushed the market down. So we're making lower lows, lower highs. Here's like a double top M, and then it came down. This was London market open. This is what we were trading, that big red candle drop, and it continued to drop all the way down to here. So we've got hourly support right here. We've got this area we just broke above, okay? So it broke above there, broke those wicks, those hourly highs. Okay, so we got above those hourly highs. And we're continuing to push up to this area. We broke above that actually too. Where did we come up to? We came up to right exactly this support turn resistance level. If we do continue to break up and push up, we'll get here before we get the daily. Okay, so we've got our hourly. We had the hourly trend break happen just recently, right here. So this candle at 11 a.m. Eastern broke the trend, came back down, retested, came up here, closed right here. One more liquidity grab at the daily and continuing to move up bullish. So we're going to see where this hourly candle can close. Can it close above these wicks? Maybe we can continue to push with FOMC, or it's going to reverse back down bearish. So going into the 5 minutes. Okay, so this is the 5-minute look. Bearish momentum coming down. There was that hourly trend break right here. So it came out of this consolidated phase. It came up, back down. Wick, wick, wick coming up. Now that bullish uptrend started with the RSI bullish divergence. And now we're going to look at some key areas here. So there's a 5-minute level right here. There's a 5-minute level right here. So I'm going to kind of watch to be safe now. If it gets above here, then this is where maybe we could look for a potential buy above here, closing above that high, maybe it comes up to that new daily range. If it comes down bearish, we could look to possibly look to sell the market below this hourly support. I'm just moving them away a little further because FOMC can be very erratic when it opens up. So I'm just trying to be safe, look for some key areas, give it some room to move and breathe, because market makers are known for liquidity grabbing during FOMC. They might spike it up, like kind of how a New York session was, where they spike it up, or sorry, that was London. Where's New York here, 9:30. NASDAQ looked more cleaner the way how they did it. Yeah, US30 was real choppy. NASDAQ was more cleaner move. So what I'm looking for is maybe where it's going to consolidate. I can see a lot of the volume now is pretty much contained in this area. Okay, so we'll see how it reacts coming out of this area right here. Okay, it's coming down bearish. So what time is it? What do we got? 1:55. We got 4 more minutes, guys. Okay, so we've got now, we're going to have US30 in the middle right here. We got NASDAQ over here. Okay, so it's getting real overbought, the RSI. I'm going to keep stochastic on for US30. And do you guys want gold, or do you guys just want NASDAQ and US30 side by side? let me know, because I really like to trade indices during FOMC, but if you guys want gold, I can do gold too, or we just stick with the indices. You guys want gold too? F gold. Okay, guys. Let's what we'll do is we got 3 minutes. Okay, so let me chart it really. Maybe I'll do gold on a set. Let's just do it right here. I'm gonna go do this one really, really fast. Okay, so daily. Okay, so gold, it's real choppy inside here. Okay, here's the daily support. Again, we're looking to break that area. We've been looking for multiple days to break that area. It's not there yet. Okay, so we're trapped inside this area. If we go into the hourly, I'm looking at that clock too, guys. 2 minutes and 50 seconds. So hourly support is right here, 1921 hourly support. Right here, 1925 hourly resistance. Okay, so we came up there and got rejected, coming down. So if we break, guys, this is going to be a big dump, 1918 area for gold. Okay, so watch that area if you're trading gold, 1918. Right now it's forming a little bit of a double bottom on the 5 minutes. Okay, right there. To sell gold, I would look below that daily. It hasn't really broke below there. I would look for the sell below there. If it continues to pump up through here, we could look for right there, but we got that wick. So, and it's forming a double bottom. So if we're looking for gold to break above here, look for a break and close, and maybe it can push right up to that hourly level, right up to there. Okay. And we'll 1922 area, and maybe it gets up to 1925. Okay. So we'll keep gold over here. Okay, people, how many of you is this your first FOMC or have no idea what this is? In the chat, guys. First FOMC, Ashok. Okay. No idea, Lisa. Okay. It's very volatile, guys. Okay, so I'm using small lots myself, quarter lots, half lots. I'm not doing anything crazy. Because it is very volatile. It's known for head fakes. When they're discussing now, it's not actual numbers like percentages. It's they're having a conference, like it's they call it minutes, meetings. But what they're doing is there's going to be no official numbers that come out on Forex Factory. It's just they have meetings. They're talking about inflation, interest rates. If they're going to continue to raise interest rates to battle inflation, maybe decrease interest rates. They've already hinted for the last few months that they're increasing the interest rates. So maybe they're going to hike it up a little more. But this stuff really, really affects the markets, okay? Especially the indices. So get ready, guys. 20 seconds. You know, if this is trade with demo, trade with low lot sizes, feeler trades if you have to, until we get some maybe confirmation of volume closing and retesting areas. But here we go, guys. And watch your spreads too. Yeah, exactly, Kat. Watch your spreads too, because here we go now. Okay, so it's dropping. It just closed bearish right there. Now it's opening up. So spreads can also start to really move, guys. So let's go. Wow. Okay. So see the big drop right there. So even gold is dropping. Everything is dropping. But see quickly. See it. Oh my God. See, guys, that's why we wait. Now look at it. Okay. So see, too erratic, guys. Too erratic. I haven't hit a buy or sell. It came down and back up. This is, look at indecision. So wow. Okay. So they're grabbing liquidity, guys. Okay. I'm waiting. Okay. See how fast that moves. Okay. It's no joke. It's no joke, guys. Okay. So they grab the liquidity from the bottom. Okay. They grab liquidity from the top. So here's the body of the candle. Okay. So now it's starting to break. NASDAQ. I'm going to go in on the feeler buy. I'm going to test out a feeler buy on NASDAQ. Small lot size on a feeler buy. Okay. And I'll get rid of this right below here. If it goes below here, I can get rid of this. Okay, I'm still holding my buy. Okay, there we go. I'm already in profit, guys. 20 pips. There we go. Okay, coming up to that hourly, guys. You can secure some profit up there. It's quick. Okay, gold is pushing, guys. Gold is pushing. Okay, guys, 20 plus pips. If you want to secure some profit up there, you can. If not, secure 80%, keep holding. It's bullish, guys. US30 is going bullish. Okay, gold is pumping. Let's see if we can break this hourly level. If we can break up, there we go, guys. Guys, almost 40 pips. There we go. Woo, 50 pips. Let's go. Gold is pumping. Everything is pumping, guys. 60 pips. Get your money, guys. Oh shit. Get some pips up there. Okay, I secured. Oh my God, guys. That is a move. Wow, guys. Oh my God, daily goals just met in 5 minutes. Secure some profit up there. Secure 80. Oh, gold is a monster, guys. Okay, we didn't fall for that little fake out shit, guys. Please secure. Oh my God, look at the pumps, guys. Gotta love FOMC. Okay, I secure profit, guys. I grabbed $350 on a half lot. That's big pippin'. Guys, you can unmute your mics, guys, real quick. Oh my God.
Come on, Ronnie.
Ooh, my heart's beating.
Yes, yes.
Come on.
But secure some profit, guys, because what goes up can come down just as fast. I'm happy with that. I just got a half lot and grabbed $350 on a half lot. So I could be done with FOMC right now. Gold is pumping like crazy, guys. 1922, we got up to 1930. That's an 80 pip move. These things are just secure, okay? Because this is FOMC. This is not something to play around with. But don't, right there, guys, we grabbed 90 pips, okay, almost 100 NASDAQ, 100 US30, 100 gold right there. But now if we're going to continue trade, we follow the volume. But do we need to trade anymore? No, we could wrap up the call right now and we could be done. If you're happy with that, you exceeded your daily goal, like Kelvin, €100 profit. Martin, you recovered your loss today to 150 loss to $19 in profit. Congratulations, you know, but don't give it back now, guys, because now it's going to get real dicey. It's going to get real, like, look at now, we're picking up a big wick. Now it's coming down. So that's why secure 80%, leave the rest with a break-even runner. That's the best way to trade FOMC. If you can, you could have grabbed 80% up there and leave the rest running. Why did I take out profit up there? We just did our top-down analysis. We broke through an hourly resistance and then it came to our second hourly resistance. Here, US30 came to our daily. So gold is just continuing up there, but I was more focused on these. And I still haven't even tallied up my, because sometimes I can't do this that fast, but 552. Yeah, 70 pips, guys. Okay, I grabbed 70 pips on a half lot, $350. So you see, sometimes if you trade with big lots, you can get a big payday, but it's dangerous. Now look at how it's coming down. So please, guys, I hope you guys secured profit. You know, I wasn't fooling around up there myself. Do you guys have any questions on that FOMC open? Did you see how crazy the candle was? Like when they spiked it down, I guarantee you sellers hit the sell button, but then it came right back up. And then probably buyers bought but then it came right back down in indecision. So they trap buyers, they trap sellers. Then when I started to see the body start to move and break above here, that's when I said, I'm going to go in on that buy. And then I held it all the way up there. So I pretty much maximize that entire candle right there for full 7
Other question?
Yeah, go ahead.
I mean, it's a naive question, I think. I mean, why is that volatility? I mean, it's a lot, you know. It's my first time, so I'm like, what the fuck is going on, you know?
Yeah,
Why?
that's
Why?
FOMC. That's what I tried to warn you guys all about what this is. It's Powell is speaking about interest and inflation rates in the US right now. So that's why if you don't know your folders and you're trading 2 p.m. and you have no idea what the hell's going on, you'd be like, what just happened right there in the market? That's why it's important to understand, to come to Forex Factory and know what this red folder is. This happens once a month, guys. So this is a big folder. That's why it's red, and this directly impacts the stock market, gold, everything. So that's why I tell you guys, trade with a demo if you don't know what this is, trade with micro lots if you don't know what this is. Like me, I'm trading with a quarter lot, half lot. I'm not doing anything. Normally I trade New York sessions with larger lots, but I don't fool around with this because it's very volatile. Look now how it's coming right back down. So if you never took profit, it's coming right back down. Goes up 70 pips and it's right back down to here. So now it's retesting this demand area. Okay, it's coming down bearish. Well, now it might get ready for a possible sell opportunity now. Okay, so if it closes like below here, we could potentially look for a sell to fill that wick. But this is another thing with over trading, guys. If you already recover, a lot of you guys have recovered your losses and a lot of you guys made some good profit, then don't force trades. You could be done. You know, you don't have to get greedy to go back in, because if I start to sell the markets now and then they fake me out and bring it back up, I could start to lose the 70 pips I already just made. So, but if we want to, what I could do is now reduce my lot size. So I hit that one with a half lot. Now, if I want to continue trading, maybe I go down to quarter lots now so I can preserve some of my profits, but I still want to trade. But I'm going to wait for volume to close, okay? Because we still haven't even produced the first 15-minute candle, okay? This is the 15-minute candle. It came all the way up there. We milked that. We grabbed everything, and now it's coming right back down, and look at where the volume is. So why don't we wait for the first 15-minute candle to close? Because this is too erratic, guys. This is very, look at now how quickly bearish it came back down. So if it closes down here, this thing could continue to push down. Maybe they came up now, picked up all that liquidity up there, and now they're moving the market down. Same with gold. These things are moving the same. Normally they don't move the same. So this is pretty unusual how gold is following the market. Wow. Okay. So big play, guys. Do you guys have any questions about this? Okay. Because do you guys understand what I mean when it's very erratic? Okay. But that's why it's got to be quick trading. Am I getting into anything now? No, Thepan, I'm not right now. I like, we trade the market breakout, but right now it's too dicey. It's too much. We got to wait for volume to close, maybe wait for the first 15-minute candle to close to give us more confirmation. But if you want to go in on a sell, you could take this sell on an impulse, but I'm going to wait. Like, look at gold. Wow. Okay. So you see how so your strategy is wait for the first 1 minute. No, if we go to the 1 minutes, it was, yeah, the 1 minute candle came down, came back up. And then when it came here, when I saw this, like, develop the wick and then come back up, that's when I took that buy, and then all the way right up there. So you see in like 2 minutes, 2 quick minutes, but now it's really dumping, guys, the market. Okay. So we could look to possibly sell the market. My goodness. Okay, so now the candle closed. Here we go. So this was the original area we were looking for, the sell right here at 375, 376 area. Continuing to drop. Is anybody in a sell right now? Anybody in a sell? Like, take the buy, grab your pips, and then go directly right into a sell? Yeah. It's tough, guys. Okay, so now it's coming right back up. I'm gonna wait for the first 15-minute candle to close. I already grabbed my 70 pips. If I wanted, I could walk away from the computer right now, close it up, and come back for power hour and trade power hour and let all this let the market digest all the information. But if you like volatility, then this is volatility. You're just watching home. Yeah, get your popcorn if your guys are just watching. But This is FOMC, guys. So that's why we do these live sessions with you guys, to show you that this is a lot of volatility. Look at gold, my goodness. Investing, you're selling from 14,500. Very, very nice. Very nice. Wow, you cut the top of basically that wick. Excellent. Very nice. What time is power hour? 2 p.m. 2 p.m. We're already 10 minutes in. Risa, 14,605. Amazing, amazing. Congratulations on all those pips. Okay, so we're at the daily area. Okay, remember this was the hourly trend line coming down. So we're testing the hourly trend line and the daily support level. Okay, so I'm waiting for this candle to close, this 15-minute bar. Okay, see, it came up all the way up there. And look at it coming all the way down, right back down to the daily. Maybe next 15-minute candle might open up bullish and start to come back up, or we're going to close below here. This candle is going to close in 2 minutes and 50 seconds. So it's very, very bearish, but I'm waiting, guys. I don't want to give away all of what I just made right there. Okay. Power hour, sorry, power hour is 3 to 4. Oh, my fault. I thought you said when is FOMC. Power hour 3 to 4 p.m. My bad. I misread that. I saw FOMC. No, I won't be on for power hour. I can just do this because then I got to go pick up the kids at school. But guys, do you guys have any questions about this? Okay, so now it's getting ready. 2 more minutes to go. Okay, so I'm going to follow this volume to see where it can close. Maybe I get a retest, maybe I sell the market and this thing continues to drop. But gold, this is like how gold moves, like kind of like NFP. They pump it all the way up and then it comes all the way down. So man, this was very, very fast. Okay, so Lisa, you'll be ready for next month. Yeah, it's I want to sell the market, but in the back of my mind is I just got 70 pips out of the market in 2 minutes. Do I really want to give that back? You know, so that's where over trading, greediness comes in. That's the whole time I'm trying to teach you guys on webinars about over trading and greediness. And my daily goal is 50 pips a day. I just exceeded my daily goal right there. And I exceeded my daily goal in London market. I actually exceeded my daily goal trading 30 minutes in the New York session. So I've already made almost 200 pips today. Like I don't need to continue trading, but I'm trying to teach you guys this as well. So you guys don't over trade and you guys get your daily goal and you're done. You can basically hit a daily goal in short time, 15, 20, 30 minutes, 2 minutes in this case. Okay, so we got 30 seconds now. Yeah, Gabby, excellent. Call it a day. Get your pips and be done. Don't trade, just call out where you would enter. I like to trade, you know, so I basically, I tell you guys when I'm going in or out, but these areas too. So the trade ideas also, it's for you guys. So you guys can follow these two as well. You don't just have to always listen to me when I'm buying and selling, because I'm not trading gold today. So, you know, so if you're trading gold, you could have saw how gold was breaking out. Don't always just listen to when I'm saying I'm buying or selling, you know. Okay, here we go now. This is the new 15-minute candle. Oh my God, I want to trade so bad now again. Wow, the markets are just dumping, okay? So that was a massive, do you guys understand like liquidity grabs, what these are, how they come up, they take the liquidity, then it moves, comes up, take the liquidity, goes down, come up, get the liquidity and move down. Yeah, Joshua, my hands are getting real itchy. I'm listening, yeah, to you guys and Dave with the straight jackets, but I'm going to see how it's going to react down here, because this was the consolidated area where it did break out when we had the bullish divergence leading into this, like right over here. So it's coming back into that consolidated area. So maybe if it can bounce out of here or break through here, but Gold, we're waiting for gold to break. This is such a big daily level for gold. 1919. So here goes gold breaking the daily. Oh my God, there's gold's drop. Okay, quickly. There it is. Guys, this is breaking. Like if I go to a full screen right now, show you gold. Here's the gold daily break on the daily. Here it is. The gold's daily candle, that big drop right there. This is the drop right here, breaking all of these wicks to the left, this entire area. Gold can drop, guys. It just dropped to 1915 right here. If it breaks 1915 with this type of volatility, this thing can come down to 1910 and continue to push down there. So that was a quick move. My goodness, these markets are fast. Michael, 95 pips on a NASDAQ sell. Amazing, 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 amazing. Okay, so it came down, gold. If it bounces back up, we could watch again this area, 1922 for a possible retracement. But the markets, guys, are just dropping. Wow. Yep. We could be looking for maybe a bounce, but don't get trapped with a bounce, guys, okay? Because what it could do is it could come down, it could bounce again and come to that trend line and drop even further, okay? They could just cool the market down with a small bounce and then it continues to go down bearish. We can see that the trend is very bearish. It came up, picked up the liquidity, and then they dumped the market. Yeah, exactly. Daniel, a dead cat bounce could be coming in the market. And this is where they trap retail traders because they see that it dropped all over here. And then as soon as they see like a green candle, then we get excited and then we start to buy the green candle. And then what happens is, yeah, if you're scalping, it goes up 5, 10, 15, 20 pips. But if you don't secure those pips, then what happens is it'll come back up to retest this area and then they drop it down further. So this FOMC is also for education, guys. So I really want you guys to learn the impact of these folders, because if you didn't know what FOMC was and you were trading 1:30, 2 o'clock, and then all of a sudden this erratic, whatever you were trading across the board, and you had no idea what was happening, if you just do a little bit of fundamental analysis and just look there today, was a big red folder announcement. Sundays, go through Forex Factory and mark down which are the most important calendars for your trading when you're trading. Oh my God, Risa, 200 pips just closed. Congratulations, man. That's excellent. Excellent. Yeah, talk to me, guys. You guys are welcome to unmute your mics, guys. I like to keep it interactive, but just if you guys can mute your mics if you're not talking for the background distractions. But how was everyone's FOMC? Pretty good? Okay, so gold, it's in this consolidated range, okay, right here, all inside here. This is gold consolidating all through here. So what we could do is we could also wait for gold to maybe retrace back up above here. And then maybe power hour, maybe after they digest all the news, okay? So power hour, maybe what we can look for is a possible retracement back above the daily. Maybe power hour will have a nice little bullish bounce come back in the market. We could look for something above there. If you guys are still going to trade after like 3 p.m., same with NASDAQ now. Okay, if there is a push back in the market, we get some buyers. If it breaks again above the trend line and closes above the daily, then maybe we could look for a continued buy above there and reverse the market. But for now, it's bearish. Okay, so here's the dead cat bounces now. Okay, so let's see what they do here. I'm going to mark this level as support. I'm going to mark this level as support right there. It's coming back up, but watch now. Here we have resistance. Right here is like a resistance level. I'll put it right here. Okay, so maybe it wants to get a little choppy inside here, this range. And so if we're looking for a buy, like a bounce buy, if the market recovers, we're looking for it to break above the trend line. It might get rejected there, come back down. I'm looking for it to break and close, give me a retest there, then maybe it could come back up. And after they digest all the news, maybe the market will recover and bounce back up. Please explain the dead cat bounce. That's when the market drops all the way down here. And then now there's a pause in the market where there's some, the market drops really, really fast, 100, 150, 200 pips in a short amount of time. And now there's a little bounce in the market. It's kind of like a sympathy bounce, okay, just to cool off the market. And then now market makers, what they could be doing is lowering the supply zones, getting them ready for a next retracement. Maybe they're trying to trap some buyers in here, and then they're going to trap these guys and continue pushing the market down. So if the market continues to push down, I could look to short it below here with a retest and then continue to move down below here. We got to see the market stabilize a little bit. Very, very erratic, guys. Yeah, a relief rally. Good way to put it. I call it like a little short-term bailout. Okay, so they drop the market, and then there's some retail buyers that might maybe just want to get in on a little bit bounce because they're expecting it to bounce and come right back up. But that's not the case. Maybe it just comes up, it forms a lower high, and then continues to drop. And then this is where we get those like 3-bar plays in a rally where it comes up, and then the volume is like right here, it closes, next candle is bearish engulfing, and then it continues the rally down. But that was fast, guys. Okay, so that's fast. So with these, yeah, you can unmute yourselves, Brandon. Yeah, it's should be unmuted. Oh, 1 second. Sorry. Yeah, Brandon, you can unmute yourself right now.
Hey, Ron, how you doing?
Good, good.
Hey, I got a quick question about your
Yeah.
indicator, your RSI indicator.
Mhm.
What are the 2 different lines for the stock RSI?
Oh, okay. Oh, for this one right here.
No, for the middle one.
Oh, the stochastic RSI.
Yeah.
It's got like the readings of stochastics because sorry, for RSI, RSI oscillates between 0 and 100. So when you're using the stochastic RSI, it's still got the 0, 100, but it uses, like when RSI uses the 70-30 for overbought, oversold area, the stochastic RSI uses the 80-20 because other stochastics, regular stochastics, they're an unbounded oscillator, they can go above 100 or like below negative. So some stochastic indicators have them going below these numbers. So a stochastic RSI still uses the 0, 100 levels. It doesn't show like it going above 100.
But why are there 2 lines?
The readings. Okay, so
Yeah.
stochastics has two lines. One is like a signal line, and then the other one is the faster moving average. They're called %K and %D. It's a complex mathematical equation, the way how they come up with these numbers. But what it is the faster moving, the blue line is the faster moving stochastic, and then the orange line is the slower one. And then what we're looking for are crossovers. And then when it's like right now, we're getting a crossover at the bottom in an oversold condition. This is why we're getting the fast blue line crossing over the slower moving signal line. So now we're getting a little bit of a bounce in the market in an oversold condition. The equations are, we have these tutorials, Brandon, explaining them. Like there's the one basic stochastic one that goes over what it is. And then there's, I think I didn't do the one with the bearish and bullish divergence, but it's pretty much similar how we look for divergence. So when I'm using stochastics, I also like to use for divergence purposes too.
Yeah, that's what I'm trying to figure out, how to get the best reading or how to view those divergences and stuff.
Yep. So like right here where we had it making this low to low, lower lows, the stochastic RSI went from here to here. So it's still making lower lows. So there's no real bullish divergence. There was more bullish divergence right over here. See on this one where it came all the way down, but my strength is now increasing. So this one gave us a little bit of that bounce right there. Also, we caught the bullish divergence that caught this, where it was coming down here. I was on a one-on-one, and then we consolidated this area, and then you can see the strength is coming up all the way through here, and that's where that was a nice buy leading into FOMC.
Nice.
Divergence is very powerful, guys. If you can use that with your trading, you can kind of anticipate the move, and then all you got to basically look for after is confirmation. You get a candle break through right there. This candle broke, close above the daily. We got a retest with bullish divergence. We got some nice confluence. It consolidated nicely, and then now was the push up. So I would feel confident taking a buy right there. Stop loss, place it below there, and then you could ride all of that momentum leading into FOMC. But and then now FOMC open is crazy, and it's very, very fast. So these indicators, RSI and stochastics, can't really react as fast as the price action, because this was super, very, very fast. These are a little bit lagging indicators. Price action is real time. So it's faster, guys, but absolutely. Like, I like to use stochastics. I like to use RSI. I just pick whichever one I'm more comfortable with, and same with you guys. So in London sessions, guys, we're introducing a new indicator for every session. And if you want a little bit of to watch that session, you know what indicator we use. So to help you.
Awesome.
Guys.
Thanks for the info, man.
Yeah, no worries, Brandon, and good luck with everything in your trading. Naom Buki, you can unmute your mic. Okay, guys, so see here how it came up to the buy area, but no volume closed. So we're not going to bite on that. Same with US30. It came up there, trapped a lot of buyers thinking it's going to go bullish, but it comes to a higher time frame daily area. And what do? They reject it. So if this volume now comes back down, maybe we'll look to short the market down here on that big rejection. So this is kind of like the dead bounce came up. Maybe they trapped some retail buyers and now they want to push it back down. Maybe it might consolidate in here, form higher lows. And then if bullish volume continues to come up here and we close, then maybe we'll take a buy if we can close above there and get a retest. And we're still below the hourly trend line. So it's not really looking for a buy right now. Still selling, still bearish pressure is coming down.
Hey, Ron.
Hey, how are you?
I'm good. I got two questions. One, how relevant is RSI during news like FOMC? And two, how long does the volatility usually last?
Maybe like half an hour, 1 hour, and then power hour, maybe we'll get a reversal. Okay, last FOMC, I remember, I can't remember whether it was bullish or bearish, but I remember during the FOMC hour, it made one move, and then power hour corrected the move. So after they digested all the information, the market reacted on the notes on the FOMC, and then power hour corrected the move, and then it kind of reverse the move. So how impactful is RSI on the news? Remember, news drops, price action moves really quickly. RSI maybe doesn't react as fast enough, but what I like to do is maybe leading into FOMC, if there's some divergence, then maybe you can anticipate a move. But I don't just like when I was trading this, when market open, I didn't even look at my RSI. I just looked real quick. It was an overbought area. I was trading how quickly that candle came down, picked up liquidity, came back up. That's where my eyes were looking. I wasn't looking at RSI. To be honest with you, I follow price action first, and then I use this to complement my trading. But when FOMC is opening up, or like NFP, big crazy market opens with news, I'm not looking at technical indicators. I'm looking at the live price action, if that makes sense, guys. Now we're coming back up. Okay, so let's see if it can push and close above the daily. Maybe we'll get now like maybe a nice little push to the upside now. divergence on the gold. Yeah, so this is using like stochastic. So you can see how the price came down, making the lower low, and stochastic is starting to increase from the bottom. Okay, so there is a little bit of bullish divergence with stochastic as well. So even gold too, watch for 1922, watch for this break. And then maybe we can come and fill this area if you're trading gold. I'm watching NASDAQ over here and US30. Okay, so this candle is going to close now in 3.5 minutes. This is a new 30-minute candle as well. Okay, so if we want to get a better understanding as to what's going on here, maybe to clean up everything, let's go to the M30, the 30-minute candle. Okay, so leading into the event right here, we broke out all the way up there. We closed. Now we're opening up with a bullish 30-minute candle, trying to get above the daily. Here we go. So now into the 5 minutes, this could be where we take maybe an impulse buy, or we're going to wait for volume to close. Okay. So here we go. I'm going to go in on a small buy. No, let me just wait. I just got to change my lot size. Hang on. Oh man, I missed it right there. I wanted to get in, but I'm going to go in on a buy. Okay. I'm going in on a buy on NASDAQ or US30. Gold is pumping up. Okay. I'm in a buy. I reduced also my lot size. Okay. Oh, there we go. Okay. 10 pips. Okay. Get it up to that hourly level. Let's see if we can push up to the hourly. This is a new 30-minute candle too. That's why I like to take the buy here. Okay. There we go. Woo, guys. Oh my God. Get your pips. Guys, 40 pips. There we go, 40 plus pips, guys. Excellent, excellent. Here we go. Guys, beautiful. Okay, we're coming up to next supply zone, so don't get too greedy. Grab some profits. I'm grabbing. I'm securing up here a little bit. I'm happy. I didn't want to, guys, you forced me to take that trade. I was, did you guys get in on that buy? Okay.
Hey Ron, you're crazy.
But there goes gold too, guys. Gold 1922. I told you watch that area. Okay. But yeah, and I scaled back. I went to a quarter lot on that one. If I took my regular size, you know, but I stick to my principles, guys. So I took a 2.5 lot, got $130 out of that. $50 pips. Okay, so 50 and the original 70, 120 on this FOMC, and just took 2 trades, 2 for 2. Didn't do anything crazy, anything reckless. The DR from -300 to 150, amazing, bro, amazing. That makes my day more than anything. I love you guys that can recover your lot. Oh my God, market is pumping, guys. Here we go. Okay, so a new 30-minute candle. You see how powerful the 30-minute candles are? That's why as a scalper, you have to always know your higher time frame candles starting in the market. And here we have on gold, we have stochastic divergence, bullish divergence. That's why 1922 was a good entry area right here. So it's up 30 pips on gold, maybe a little more. But these things are moving, guys. Holy shit. Power hour is going to be fun, but I got to go pick up kids at school. Excellent, guys. Did you guys grab that buy? Yeah.
I'm up like 140 on that second buy, but
man, bro, respect, bro. I love it, man. I love it. 2.5% for the day on your 50K funded account. Cisco, congrats. Amazing.
My feeler trade shot off without me. I wanted to put a 10 lot down, but I put a standard lot buy stop, and my buy stop went 80 pips up. I was just like crazy.
Man, guys, this is like, this is FOMC. This is why, like, scalpers, we love volatility, but you gotta be patient with it. You can't force trades. You gotta be patient. Pick your areas, you know, and don't get greedy. That's all you got to do. Like, that's proper trading. I could have traded, if I wanted to, I could have traded every single candle. That's how I used to trade back in the day. But I don't want to teach that style to you guys. It's very stressful. It's very taxing on you physically and on your account to learn. But if you have a little bit of patience, we allowed the dip to come down. Some of you guys picked up the sell, but remember here how I boxed it in, a dead cat bounce, but right there they came up and then the bullish candle, and then I saw it was a new 30-minute candle and I grabbed. I wanted to enter as soon as it was breaking, but I had my half lot, and then I had to go back and put it down to, and then I lost maybe another 10-15 pips when I was fooling around with the lot sizes. But it's fast, guys. So again, secure profit, because look at now how it comes back down. So don't give your profits away to the markets. Best strategy, guys, if you want, secure 80% and leave the rest running with break even. Then there's no woulda, shoulda, couldas. You can leave 20% as your runner. Sorry, Scott, go ahead, bro.
I'm 20 pips up on a sell already.
Yeah, it's fast, guys. It's fast. You know, it's fast.
Might take this actually.
Amazing. Thepan, you were down $250 now in 250 profit. So like that's an account flip, you know? So
Not
stop
bad.
trading right now. Thepan, stop trading right now. Take the night off and come back for London or New York tomorrow. Okay. You just flipped a negative account back to positive. Now go over your trades today. What I would do is go over why were you down 250 today, review those trades and learn from those. So tomorrow and next week and next month, we don't make those mistakes again. But stop trading. You flipped your account from negative 250 to positive 250.
Hello.
That's it. I'm telling you guys the honest truth, guys. Don't over trade. If you guys have done well right now, don't even trade power hour. Okay. It's not worth it. Patrick, almost 6% for the day. That's that's a huge percentage gain in one day. 6% is no joke, guys.
Hello.
Yeah.
Yeah. Ron, I went up.
Hithrek, how are you? Can you speak a little louder, bro?
Yeah. Hello.
Yeah.
Can you hear me?
Yeah. Just if you can speak a little louder.
Yeah. I went up. Okay. Then I got down.
Mhm.
Then I made some good profits. All right. Should I get out now or
If you're up in
get
profit,
back into the bullish?
if you're up in
Yeah,
profit,
I made good profits.
stop trading. Stop trading. That's a profitable day. Profitable day. Now
Okay.
take the day off, relax now, review your trades today, and then we come back tomorrow. You got to
Yeah,
learn this,
alright.
guys. We have to learn discipline. We got to have daily goals.
It was my first
Otherwise,
time
we're just going to
working
make money.
like-
Tomorrow we lose money. Next day we lose money. Next day we make money. We have no consistency in our trading. And we're like a yo-yo, up and down. If you guys want to do this for weeks and months and years, you got to have daily goals. You got to hit your goal and just be done, you know, especially for the guys that flip negative to positive accounts. You guys should be the first ones that are done for the day. You had a negative day and now you turned it to positive. That's it. Because now if you guys get greedy, you could be trading now power hour and maybe you go back in a loss, and then now the market is done, and then you go back in that vicious cycle. We went over this on the webinar yesterday, fear and greed. Okay. So the greed will kill you if you've, like me, anytime I flip if I had a bad day, I'm negative, I come back in power hour and I flip it positive, I'm done trading. I'm done. That's it. You know, what are we trying to do here, guys? Are we trying to make this into a casino? No, we got to learn proper risk money management. Did you know how important this is, guys? That's why traders are successful, because it's not just trading candlesticks. Candlesticks is just 20% of the equation. Money management, your account management is everything, guys. So if you don't learn that, trading is going to be very difficult for you guys. I'm telling you guys, I speak honest truth. You know, sometimes I'm not here to hurt people's feelings or anything like that, but Dave and I, we actually care for you people. We care for you guys. You guys are like family to us. So I would tell the same thing to my brother or my sister, or, you know, same thing. So I don't look at you guys any different. Like we feel for you guys. When you guys lose money, we lose money. When you guys make money, we make money. You know, I get more happy when you guys are making money, to tell you the truth. But yeah, guys, so right now, the market now, so what we got to do is, if we're not trading right now, we got to review what's going on in the market. Okay. So now if we're out of trades right now, like myself, I'm out of trades. I'm done trading right now. I got to go grab the kids in school in 15 minutes. But now what I'm doing is looking for patterns. Okay. So what am I seeing right now? If I'm going to continue to trade, I'm going to get rid of all these green boxes. I'm going to look now, how did FOMC move right now? Okay. So FOMC, they pumped the market up here. The big liquidity grab, okay, we traded that candle up there. Then it came down bearish, back down to here, holding support. It came back up. So now it's back into the supply area. It's making a lower high. If we continue to push down, like sell ideas, maybe back below the daily. Like we got a daily area here. So I would be playing the daily area in my trading. If I was going to continue to trade more into power hour, I'd look to see if volume can come back and close below the daily, maybe retest, then it breaks this consolidated area, then we get another market dump near the end of the day. If we're moving now bullish, okay? So FOMC high came up to here and came back down. So we've got this area of like the bodies are more important than the wicks. I like to do an area here of supply. This supply zone is the lower supply, then we have a higher one. So if in power hour we close above this area, then maybe we might have enough momentum to come back and hit that FOMC high, and maybe it might break that hourly, and maybe we have a push at the end of the day and we move bullish up there. So those are kind of the zones I would be looking at. And then I would watch how volume is consolidating in this range leading into power hour. If they keep it tight in here, and then I'm looking to continue to trade, I could move this and look for a sell right there. But for now, keep it safe at the higher time frame areas. If you've already made your pips, your goals, then just be done trading. If you have the addiction to keep trading, lower your lot sizes. Did you see how I did it? I traded with a half lot. Then my next trade was a quarter lot, and I made 120 pips on this session. That's more than enough for me. Okay. And small lot sizes, guys, you can do pretty good with them. Don't always think that you got to trade these markets with huge lot sizes. You don't need to. Compounding is powerful, guys. Compounding is very, very powerful. Gold is forming like a double top up here and coming down. So this is a big area on the daily. I told you guys, if it continues to close with volume below, gold can start to dump. We already made a new daily low to 1915. Gold could be coming down and breaking down here. If it breaks 1915, look for gold to come down to 1910 right here. A good job, Davis, up 1.8% from FOMC. Congratulations, man. That's amazing. Yeah, but good job, guys. Yeah. Any questions, guys? I got about like 5-10 more minutes, and then I gotta head off to go get the kids.
Just a quick one, if you don't mind.
Yeah, Mark.
How do you work out your lot size with your account?
How do I determine lot size for my account? There's
you know what your 1%.
Stinu. Use the app called Stinu, Mark.
Stinu. Yeah, let me write it in the chat. Stinu is, Scott swears by this.
Yeah, man.
We're gonna get Scott to be sponsored by this company. STINU, Stinu.
I actually downloaded that, but it's more for Forex, not for indices.
So I just basically do with my account. Oh, guys, so now we're getting a little bit of a bullish push up here, bullish push. I just look at my account side, like what I want to feel like I'm trading. So normally when I'm trading, I usually trade with a standard or a double lot. Okay, that's my normal trading sizes when I'm trading like New York session, not crazy FOMC or NFP, just regular New York trading. Like when I was on the one-on-one call around 11 a.m. Eastern, 12 p.m. Eastern. That's like when the market cools off, it trades more consistent with less volatility. I trade with standard lots and double lots. But FOMC, I scaled it down to a half lot, quarter lot, because there's so much volatility now. And it moves 30 pips, 50 pips, 100 pips. So even with a quarter lot, with that quarter lot, I made one, I don't even know what it was, $130, $130 on a quarter lot. So that was 50 pips. So I scale it down with the volatility. Okay. Same with London session last night. If you guys were with us on London session last night, I got faked out on the first sell order on NASDAQ. So it was, let me just show you guys what happened in that last night. London. Okay, so London was, where are we at? 3 o'clock. Okay, so 3 p.m. I saw this 3 bar. It came up here to this supply area. this was my psychology, why I took the sell. Okay, so it came down here, 255. Then we got this, it opened, here's 3 o'clock. So it opened green, came up to the supply and got rejected. And it was a nice candle coming down here. It closed. So it closed below where I had the support level. And then this candle opened red and went down. So I took the sell on that, like that red candle coming down. I went up 10 pips. I didn't take because I was looking for the drop. I was looking for this area to break. That's what I was looking for. I was looking for this area to break and give me the big drop because that's what I was looking at. But it reversed on me. I took the stop loss right there. Then I didn't go into a buy. I didn't go into the buy. I was watching it. Then I started to see how it was trending down. So I got faked out on the initial move. And then I saw this candle again, 3:30 a.m. just like right now, where the new 30-minute candle opened. This is when it started to break. This is when I went in on a sell on NASDAQ, and I went in on a sell on German DAX market too. So I hit 2 sells on 2 of these, and then it really broke down. So this was the kind of move I was anticipating over here. It didn't happen, but I used a smaller feeler trade. It was easy for me to exit with 20-25 pip loss, but then I made it all back over here with the regular trading lot size. So guys, feeler lot sizes are very, very important in your trading, especially for scalpers. If you're looking to take a trade, but we're not sure with no volume closing, then I would recommend doing that, guys. And then when you feel comfortable with the lot size for your account, it just will become natural. Like for me, trading a standard lot size is just natural for me. I've been trading with it for years and years and years, but when I'm trading different securities, my lot sizes change. So I'm not just using a standard lot when I trade GBP USD, if I'm trading Forex, if I go to gold, if I go to indices, I change it. So because the volatility changes. So if I go to GBP USD, maybe the moves are not going to be 20, 30, 50 pips like how indices move. So maybe I'm looking for 5 or 10 quality pips out of GU, but I might go with a bigger lot size to make up for those pips. But I don't trade FX as much as I used to. Like years ago, I religiously just traded GBP USD for like 2 years straight. But I really like how indices move because you can go in and out, get your daily goal in a short amount of time and just be done for the day. So
is that like where I get a 10 pip lot stop loss or something like that, is it?
Sorry?
Is that like with a 10 pip stop loss or
if
like
with a hard stop loss 10 pips, if you're just setting it at 10 pips?
Yeah, is that what you use?
No, I don't trade with a hard stop loss. I trade structure. So like for example, if I'm taking a sell on this candle right now, if I hit the sell button right now, I would place my stop loss, my mental stop, like above this supply area, because I look for liquidity grab candles. But I'm very disciplined. I get out when I see that the structure is breaking and I get out of the trade. I don't hold it. If it comes back up here and I'm down 20 pips, I'm going to say I'm going to hold it for another 10, and then it goes 30. Then it comes up here and I'm going to say, I think it's going to retrace here. I'm going to hold it for another. Then before you know it, it turns into a 30 to 50 to 70 pip loss, and you're holding a shitty trade for the rest of the day. And that's where it can lead to blowing up accounts and things like that. But I used to, and guys, I don't recommend this, okay? So if you're new to trading, you're a beginner, please use a hard stop loss until you learn how price action and liquidity moves. If you feel more comfortable later on trading without a hard stop, you have to use a mental stop. But I trade structure, guys. I trade liquidity. So I look for supply demand areas. I look for liquidity grab candles, because when you're using a hard stop, you might have the right intention that it's going to break bearish, but it comes up one more time to pick up liquidity. You got your stop there. You have the right intention that it's going to sell off, but your stop is right there. Market makers know your stop is right there. They come, they stop you out at 10 pips, and then the market goes down 30, 50 pips. And you're like, fuck, I had that. And I just got screwed over by my stop loss. So over years and years and years of trading, I've been burned so many times with hard stops where I had the original intention of the move. So I kind of now take things into my own trading. But I still respect my mental stop loss. And I tell you guys when I'm getting out, you know, but I trade structure. It's completely different from just getting into a trade and then just setting a 10 pip stop loss, because maybe 10 pips might be just here, but the real supply area is here. So if you were trading structure, maybe if you increased it to maybe a 15 or 20 pip stop loss and you reduced your lot size, you still have the same risk to reward, but now you're allowing the trade to really breathe and do what it needs to do. So that's very important, guys. If you're trading with, let's say, for example, a standard lot 1.0 and your stop loss is 10 pips. So your maximum amount of money you're going to lose is $100. Now, if you want to increase it to maybe 20 pip stop loss, but you don't use the same standard because now you're risking $200, reduce your lot size to a half lot. Now you're trading with a 0.5. You still have now you have increased your stop loss to 20 pips, but you still have the same risk, the risk money management. You're still willing to lose $100, but now you've actually moved your stop loss. You've given it some more room to breathe and to play. And sometimes as a scalper, you have to do that, because not always do we get into trades and we go directly right into profit. Sometimes we do because we nail the entries, but other times we go into a little bit of drawdown. So we still got to allow the trade to do what it's got to do, if that makes sense. But it's all, you got to play around with it. Everyone is different. It's all personal preference for everyone. What works for me might not work for you. What works for you might not work for Scott. So everybody, that's what trading is. You got to find what works for you guys. And then we got to master it, practice it, and perfect it. And then it will just become natural. Like everything you do in life, when you go get in your car and you drive, it's just natural. So trading will become natural. That's when you know when you're in the zone. When trading just becomes natural and you're not scared. You're not fearful anymore. You're not greedy anymore. You're respecting your trading. You have a discipline. You respect your daily goals. Then you're going to see your account to really start to compound and grow. And that's what trading is. That's the truth of trading. It's when you can compound growth, do it consistently, where you're not scared. Like I'm not scared of FOMC. I know some traders that say Dave and I were nuts how we scalp FOMC, how we scalp NFP, how we scalp New York Market Open. They think we're crazy, but I love volatility. I am a true scalper to the 1 to 3 to the 5 minute candles. I love volatility. I love quick moves. I love 100 pip move in 15 minutes, where swing position traders are trading 4-hour candles. And I love them too. I love swing position traders, what they do, but they might have to hold trades for an hour or 2 hours to make 100 pips. I like just getting in 5, 10, 15 minutes, get the pips and get out and go on with my day. And I don't have to sit and stare at the charts all day. But that's confessions of a scalper. That's confessions. That's confessions of a scalper.
Great stuff, man. Thanks a lot.
Yeah, but it just, guys, it takes a little bit of tweaking too, you know. So start off with how you trade, and then we can tweak it, you know, so you'll find what's best for your account. And remember, don't compare yourself with other traders, because we don't know how much capital they're trading with. If you're trading with $1,000 and you're trying to compare yourself with someone who's trading with $10,000, $50,000, or $100,000, their risk is completely different from you. Their leverage is completely different from you. So you got to compare yourself with you. This is a battle between yourself and the markets, nobody else. So don't compare yourself with other traders. Some traders have been in the markets for 5, 10, 15, 20 years. So they have the experience to do what they got to do. But if you're a beginner, let's just learn the proper way of trading, is with proper risk and account management. Don't look at dollar values, guys. Look at pips per day, per week. Now we're starting, guys, here's the push. Okay, so this is leading into power hour. So again, a buy area will be like above here. This one is just continuing to push bullish, guys. So this is the market reversal. This is a V bottom. This is a V recovery. It came down and it's a V recovery. It's forming now like a head pattern, an inverted head. Here's our left shoulder, right shoulder. There's our breakout. So if you're looking for pattern trading, same with when NASDAQ catches up, the break could be right above here for NASDAQ. But US30 is pumping hard right now. Oh my God, here comes NASDAQ. I want to get into another trade, but I can't. I got to go get in the car and start driving.
This is sorry, quick question for you, like just Ashok. Is there any webinar or something like there for power hour? Like I've never actually traded power hour before, because of these.
What we're gonna do is, yeah, we'll get more like these live trading FOMCs. We got a few of them. We'll make a folder. Maybe we'll add them in like the bootcamp folder. We don't have a lot of videos in there. We'll start uploading all the FOMCs, the power hours that we have recorded. We'll put those in there. Guys, when my kids are done school in summertime, we can be trading more power hours with you, June, July, and August. We can do that. Power hour is really fun, guys. It's a look at the pump, guys, leading in. So gold is continuing to move bullish, guys. So everything is lined up. Like the indices are lined up with gold. Normally it's kind of like opposite direction, but gold is really moving with the markets right now. So FOMC, they released their minutes, which is they talked about if they're going to increase interest rates, hint in a few months what they're going to do. The market reacted, and then now they digested the information, and now it's back to bullish momentum. So that's what trading the news is. It could just be a short-term reaction, and then once the market digests it, then it's back to regular scheduled programming and just going with the regular flow. But as scalpers, we scalped the pop. Some of you guys scalped the bottom, and then some of us got that back up, but here could be continuing leading into power hour. Power hour is going to be in 3 minutes, guys, 3 p.m. So maybe it might be a quick fake out and then continue to move. But things over here with stochastics, it's coming up to a double top up here daily, but the stochastic is actually coming down. Okay, so maybe we'll see a little bit of a reversal come back down. So if you guys are still trading, careful trading, guys. If you guys have met your goals, stop trading for the day. Stop. If you guys had a negative day and now you guys are positive, shut the computer and walk away right now. I'm walking away from the computer. You guys should do the same. If you guys want to continue trading power hour, just with proper risk management, everybody. But thank you guys so much. I got to wrap it up. I got to go grab these kids, guys. I had fun on this FOMC. Hopefully you guys too. Hopefully you guys learned something new. For you guys that don't even know what FOMC is, now you know what it is.
It can also change the direction of the market, yeah?
Pardon?
This like news release, I mean the anticipation for this, right? So now that the news or rather the report is out, it could change the whole direction of the market.
Oh, absolutely. So now this could be the midweek reversal. Today is Wednesday. So now come Thursday, Friday, again, when we do our top-down daily analysis, maybe we're going to get a continued pump with the markets. Maybe we might get a retracement. So again, we're going to look at top-down analysis. So Monday, Tuesday made its move. This is called a midweek reversal normally happens. Thursday, Friday could be a continued move or a retracement. So we always start with top-down analysis, and then we figure out which way these things are going to move. So yeah, guys, I had a great session. Thank you guys so much for joining. I appreciate all of you guys. Congrats to everyone learning. Congrats to you guys earning a little bit. And I will, what is today? Wednesday. So Adam will be hosting Tokyo later tonight, and then I will be back for London 3 a.m. guys. So we don't stop here at SST. We just keep going. So hopefully you guys are enjoying everything. Lots of webinars posted. A lot of live sessions are being posted up. So lots of content now is coming up. So lots of review, lots of homework, guys. So, and we'll get more of the power hour recorded sessions and the FOMC recorded sessions online for you guys. So lots of content. Anyways, guys, enjoy your day. Ayub, you were down $50 and now you're up $12. Amazing. So that's a nice little swing. And now let's carry that momentum into trading tomorrow on a positive note, guys. So thank you guys, everybody. And practice proper risk account management. I can't stress that enough, guys. Thank you, guys. We'll see you guys later. Have a great day. Enjoy your day. Good night, Bhavna.
Good night.
Bye, guys. Bye, Gradis. Have a good day.
Night, Ron.